heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is off. This is Bloomberg Technology. Full market coverage ahead as the Magnificent Seven see a momentum rally like never before. Plus, we push ahead to GameStop's AGM as CEO Ryan Cohen gears up to deliver remarks. And we take a look at the summer box office as Inside Out 2 rakes in over $150 million over the weekend. But first, let's check in on those markets because we are seeing some pause, shall we say. We are looking at what the Federal Reserve comments are going to be this week after the policy, yes, last week, of course, signaled maybe, are we going to get the rate cuts that the market is anticipating? More notably, is the political tension still happening over in Europe? 10-year yield just actually selling off significantly after there was this push for havens last week. That calms a little. Why does it calm? Because Marine Le Pen over in France, right-wing, of course, person that we could see become prime minister if indeed we do see this, well, this legislative vote go her direction. She's trying to calm the market, trying to calm, well, the broader French population to say she would be still backing institutions and she'd support Macron if she did indeed become prime minister while he was president. CAC 40 sees some relief. We're up 0.9%. Move on and see what's happening on the individual movers today, because we are seeing a little bit of movement on what's happening in the chip sector. Now, the stocks was previously at a record high. We dial back from that as Nvidia indeed sinks. $130 is where we currently trade. We're getting some big calls from some big investors and analysts still saying, look, we could go as high as $160. Susquehanna pointing us in that direction. But we just perhaps take profits as we hit a new record high. Micron, though, up another 2% as we see analysts upgrade their price target on this particular stock. Broadcom also winning as we look towards that stock split. They follow hot on the heels of Nvidia. 1,798 is where we trade. But look, we have seen these particular chip names do phenomenally well over the course of this year. And many are saying, look, this is momentum strategy that's winning. Basically, what do? You buy the winners and you sell the laggards. It's always kind of a powerful force in the markets, but right now it is a complete tear on a scale that we've never seen before. We want to break it all down with Bloomberg's Isabel Lee, and there's a great bit of reporting coming from Bloomberg across our outlets, really talking about how much this momentum trade can stick, because it's working.
Yes, it's definitely working on a scale never seen before. The relative performance has surpassed that of the dot-com bubble, which was in 2000, so it's around 24 years. And it's really simple. You buy what's winning, you sell what's losing. But the question is, will it last? And momentum has a tendency to go on and on until something stops it. Worth noting, though, that this stretch has been going on for quite a while, longer than usual. But what's concerning is how the driving force is really mostly valuations. It's not anything about great momentum about earnings. So this is why some people are worried that it might buckle any time now, but then just with anything, this is the winning trade. There will always be losing trade, and the losing one is value. But of course, if you're invested in momentum and if you're tracking momentum, it's a great year so far. In the strategies that Bloomberg tracks, there are 13, and top of the list, momentum, 16%.
It's interesting that you say some of the worry is about whether it's on valuation, whether it's on earnings. Now, some would say Nvidia's earnings increases do vindicate the valuation uptick. But is it just the breadth? Is it some of the other names that are getting swept in on this that are moving more on valuation than actual earnings guidance?
So that's fair. I mean, I think Nvidia, every time I ask about Nvidia, I do get bulls and bears. So it's like there's even no consensus. But the thing about this AI rally is the big winners are getting bigger, and obviously everyone is left behind. I mean, you take a look at Apple. Apple last week saw one of its best week in years just because of one announcement. And the thing is, it's interesting that these announcements wouldn't even roll out in the near future. So how will we test whether they will work? But then for the longest time, Microsoft's lead against Apple seemed far. But now Apple is inching towards Microsoft just because of that one announcement of an AI chat GPT-like integration, basically to compete with Microsoft. So that's the thing. The players are so narrow, and whether the momentum trade will last remains to be seen. Is AI really going to be a transformative technology that will drive profits and productivity? Or is it just going to give some companies a handful of cash for the meantime?
Well, I'm sure the companies are liking the handful of the cash for the time being, and indeed the investors that bet on the winners. Isabel Lee breaking it all down. Let's talk about what could be the catalyst that puts it to an end. Pleased to welcome Megan Horneman to the show, Verdence Capital Advisors CIO. And to that point, this has been a runaway trade, the momentum trade. What could stop it?
So, you mentioned it's a momentum trade. So to be able to figure out exactly what will stop it, it's basically impossible. But we think that there's a couple things to keep in mind. The interest rates right now, we did get that flight to quality last week, so yields went down. Markets like that. But then take a look at what's happening today. Yields are backing up. That can take some of this momentum out of this rally, because what's going to happen is people will just start looking at valuations. And with the uncertainty around where interest rates are going, we obviously know that eventually the Fed will cut rates. We just don't know when. And when you're looking at long-term yields, when you're looking at the Treasury market, the dynamics in the Treasury market are just for higher yields because we have so much issuance that's out there. And this is something we think could take some wind out of this sail here. It's just, it can be a valuation correction.
Really interesting that you're looking at what's happening in terms of supply side with treasuries. Well, what about the inflation picture? What have you been taking from the PPI, the CPI, and whether or not we are cooling or whether actually we're still just too high for too long?
It is cooling. The data we got last week was good news, but let's keep in mind it was 1 month's data, and we still are a far way away from where the Fed wants to be. And when you actually dig into some of those reports, this is a goods deflation story. This isn't a service deflation story. In fact, we're still looking at service prices that are quite sticky, and housing as well is another thing that's sticky. These are things that the Fed is going to be taking into consideration. This is why we think, and we kind of lean in the camp, higher for a little bit longer. We might get something in December, but we need a lot more information before we can say that the Fed can do that.
And just add in, as you say, that flight to quality, that volatility that we see because of political risk over in France, of all places. I mean, how much, Megan, do you have to take in the global geopolitical risks right now?
I think it's something we have to consider. When coming into this year, we knew we had a lot of elections and political risks globally. And let's keep in mind, we still haven't gotten to November here in the U.S. So there's a lot from a political standpoint through this summer that can keep the markets on edge. And it just tends to be when there's so much risk out there, but the markets are so high. What's the upside risk from here? That's what I don't see. I see a lot more downside risks from here than I do upside catalysts.
So what to do as a chief investment officer of Verdence Capital Advisor? I mean, where do you see, is it protecting your downside, or is it hedging, or is it more sort of reallocating in some way?
So at this point, there's, hold cash. Keep a good amount of dry powder that you can take advantage of opportunities. That's what we've been doing. Cash isn't hurting you right now. You're getting 5% or more. Eventually, that won't be the case. But for now, you have the cash to be able to look for opportunities. And there will be opportunities. Right now, if you look at the market, parts of the market that are really unloved, look at small and mid-cap stocks. Now, the economy starts to roll over. They're going to struggle a bit, but that's the time to take advantage, because that's where you see the best upside as we get out of this, an economic slowdown. And they're priced so on a relative basis versus large cap, the cheapest we've ever seen.
When you're thinking of a technology show such as ours, and many want to understand the realities, you need to be diversified, but they also want to understand where the opportunities are outside of Mag 7 in technology. Like, is there a play for tech or indeed AI in small and medium-sized companies?
So, the AI is here with us. It's been here, but it's just only going to evolve going forward. The one thing when you think about AI is it's not just technology, and I know it's a technology show, so I apologize, but let's look at other areas of the market that will benefit from AI. So what are the companies and sectors that are going to benefit from implementing AI? That we can see that in their earnings. Those are some of the things that we're looking at. Industrials is an idea. Some consumer stocks, I think it's right now a little bit cautious because the economy is weakened and consumers are definitely stretched. But think of where the companies that are going to benefit from the use of AI going forward.
What about energy? I mean, there's a great story, very well read, all about the focus of Bill Gates at the moment, perhaps on nuclear energy. And I'm wondering whether you're seeing energy and some of the infrastructure needed for this new AI paradigm shift as a place to bet.
Yeah, absolutely. That is an area. Look at what utilities have been doing as well because of the use for it. But the infrastructure side, we don't have yet to be able to support what this AI is going to look like in the next decade. So we do need, from an infrastructure standpoint, those are some areas that we'll look at as well as we see some broader weakness in this market.
It's great to get a take that encapsulates a lot of tech, but also how to diversify outside and around it. Megan Horneman, we really appreciate it. Verdence Capital Advisors, stay well. Meanwhile, coming up, look, there's been a meme frenzy, and GameStop's annual meeting actually kicks off today after it's postponed due to technical issues, due to that meme demand last week. For details, that's coming up ahead. Meanwhile, look, keep an eye on shares of TSMC. We look at what happens in terms of trading of ADRs, which actually there is a trade here. There is a long-favored arbitrage strategy where you buy TSMC over in Taipei and you short the US ADRs. American Depository receipts listed here. But it's becoming painful because basically the premium of the US is pushing ever higher. Will we see it turn around? This is Bloomberg Technology. Talk EVs. Ferrari will release its first fully electric model next year, but is open to a range of technologies. It's all according to the company's CEO. Now, younger buyers favour electric, but established customers, well, they're hesitant to give up the sports car's trademark roar. Ferrari aims to offer traditional, hybrid and electric options to satisfy all of its customers. And let's talk a little bit more along the electric vehicle route, because Tesla has gotten approval to test its advanced driver assistance system over on Shanghai streets. Bloomberg's Craig Trudell joins us now. And how important is this for FSD? How important is this for the Tesla business model?
It's an incremental step, and I do think that there's some potential for what Tesla markets as full self-driving to be a more meaningful contributor to their business in China, which they could really use at the moment. But what we don't know is just how long it's going to take them to be able to offer this more widely. Even this incremental step that we're reporting on today really just applies to the city of Shanghai and potentially also Hangzhou, another city. And so we're not necessarily seeing China take the same sort of hands-off approach that we've seen in the US, where they've been able to offer FSD nationwide, and it wasn't all that much trouble for them to make this available to consumers. On the other hand, in China, they're really going to have to sort of in piecemeal fashion hit the sort of tick the boxes that they need to with regulators in order for consumers to be able to activate this.
And it feels as though Musk has realized that he needed these green lights coming from regulators. He made whistle-stop tours to Beijing, and actually, therefore, having to play alongside all the other Chinese EV makers.
Yeah, that's right. And this has been, months in the making, even before that recent trip to Beijing that you mentioned. This is a case of Tesla having, offered the ability to buy this if you're a customer in China, but, not being able to actually activate it and be deployed the sort of ability to turn this on. And so, I think there's still a lot of questions about, just how willing Tesla is to continue to charge as much as it has for this system, depending on, how much sort of capability it's able to offer, because this is all going to be up to the regulators. And again, I think they're going to, the likelihood that they're going to be as permissive as the U.S. has been, where Washington has taken this view that we don't want to stand in the way. We want to offer, driver assistance systems, plenty of leash to try and, offer, the sort of safety benefits without, getting in the way. That still remains very much an open question.
Craig Trudell, we thank you so much. All things Tesla. Now, Tesla has a pretty loyal shareholder following. So too does GameStop. So loyal that they're going to have to reschedule their annual meeting. It kicks off today, 12:30 p.m. local here in New York, Eastern time. It was delayed last time because of technical issues. We're going to break down why with Bailey Lipschultz. And it was because too many people wanted to log on all at the same time, right?
Too many people trying to get in. Computershare saying that they had to reschedule it from Thursday afternoon, again, to your point, to 12:30 today. We had to resort to Twitch streams, YouTube streams, X streams, which was interesting because there were tens of thousands of people flocking to these channels that normally get maybe a half dozen people checking in on a daily basis. So people trying to find a way to stream it. So fingers crossed it goes off without any glitches today.
And why is there so much demand? I mean, who are we going to be hearing from? What are we going to be knowing?
No one knows. So when you look at last year's AGM, when Ryan Cohen, it was the first time as chairman leading this call, he spoke for about 90 seconds. The entire call.
90 seconds?
90 seconds.
Okay, blink and miss it.
The entire call lasted about 15 from start to finish. So no one knows what's going to happen. There's so much interest in whether Roaring Kitty, Keith Gill, could appear or be mentioned in any way, shape, or form. The company did raise about $3 billion through sales of new shares over the last 2 months. So will they address the cash haul that they have now, about $4 billion in the balance sheet? Will they address the strategy? No one really knows, and I think that's part of the reason that people have to tune in, because if Ryan Cohen appears, how long does he speak? Does someone else make a guest appearance, or is it strictly business from some of the lawyers?
Now, having tuned into Keith Gill's own YouTube channel the other week, it doesn't seem like he knows much about the strategy of GameStop either, but he does seem to be moving around his holdings. He's changing his options into actual share ownership. That seemed to be pushing up the stock recently.
Yeah, there was some excitement around that. So we saw about a week and a half ago, he posted a screenshot on Reddit, 5 million share stake, 120,000 call options. A couple days later, turned out he exited that call positions and reported north of 9 million shares. So that makes him a top 4 holder if we take it at face value, and is on paper worth, the last time he posted, about $262 million. So where did he get the cash from? How rich is he? A lot of questions and uncertainty around that he never addressed on his stream. But nonetheless, again, if you take it at face value, what he posted on Reddit, top 4 holder from a retail shareholder who back in 2020 was preaching GameStop, the Ryan Cohen vision, and short squeezes.
And let's just focus for a minute on Ryan Cohen, because if you haven't been a complete GameStop fanatic of the story or indeed the stock, why do we care so much about this individual?
Co-founder of Chewy, so a lot of people bet against that, said they would be Pets.com 2.0. Very successful sale to PetSmart, ultimately went public when he was no longer associated with the company. Made a pretty nice fortune from that. He took an activist stake back in 2020 in GameStop, then pushed and really helped trigger alongside Keith Gill in early 2021, getting seats on the board, pushing for changes, ultimately ousting pretty much the entire management team, and now is the chairman, CEO, and president of the company. And really the whole belief in GameStop with Keith Gill's thesis is that Ryan Cohen will be able to turn the company from a brick and mortar company that has shown slowing sales, has shown a need to close some of those stores and completely revamp the business. The question is, what does that look like? How do we get there? No one really knows, but that's the whole kind of group mentality behind the GameStop bulls, the retail investors who really like the stock, is that Ryan Cohen knows. He won't tell us, but at some point this is going to end up working out, and that's really been why we've seen such a wild ride over the last 3 years. And you have to kind of, at some point, tip your hat, though, because Ryan Cohen in RC Ventures owns about 8.5% of the company, so he has put his money where his mouth is.
And he's put some money in the balance sheet of GameStop too, and that's meant Citron, for example, has just exited at short. Always great to get Bailey Lipshort's on all of the backstory when it comes to GameStop. Tune in at 12:30 local. Meanwhile, coming up, Google DeepMind. Well, it shifts from a research lab to an AI product factory. Or at least it tries to. We're going to talk about the move and if it's undermining its long-running strength in foundational research. That's next. You know what? Just keep an eye on some of these chip stocks, because AMD has been under pressure all day. It seems as though the rest of the benchmark is kind of playing catch up to it. No real news around other than some new AI 9300 series CPUs won't be offering Copilot Plus features at launch. That's being reported by other outlets at the moment. But we keep an eye on down more than 2%. This is Bloomberg Technology. Google, which has long been a pioneer in new technologies like AI, has just watched rivals like OpenAI harness its research and seem to leapfrog it in the world of generative artificial intelligence. So the company is reorganized. Originally, Google had 2 separate AI labs, Google Brain, where researchers kind of pursued passion projects with some loose oversight, and of course the acquired DeepMind, co-founded by AI luminary Demis Hassabis, who had this to say about the future of AI development.
I think AI is overhyped in the short term and probably underestimated over the long term, like what it's going to bring. And I think that's probably true of a lot of breakthrough technologies. So I think we're seeing, because of the popularity of AI now in the last couple of years, lots of people trying to get into this space who maybe haven't thought about this as long as people like us who've been in it for decades. And I think we're going to see a sort of rationalization process happening.
Indeed, that rationalization process is upon us with a combination of Google's 2 AI labs in 2023 into a super unit called Google DeepMind. Look, it was to commercialize products and keep pace with competitors, but several employees are saying this move has been undermining the company's edge in foundational research. It's a great story written by Mark Bergen. We want more on this because is there a tension internally after these 1 year down of an amalgamation?
Yeah, I mean, to be clear, it's Google. There's always a tension internally. It's a big, messy company. I think what our story does, I think kind of unfolds here is that, like, part of it is geographical, right? DeepMind has historically has been London-based. Google is out of its headquarters in Mountain View. You've had these sort of competing labs that in some ways operated very differently. DeepMind has, for the past decade, basically an incredibly well-funded research operation and doing some cutting-edge AI, probably the world's most cutting-edge AI, is not always connected to Google services, Google profits, its commercial center. Now they're attempting to, I think, swing much more in a focus on products to be, Gemini being the flagship one, competing with OpenAI's model. I think there's still a lot of bumps and warts and all in that merger. And there's always a conflict between how much is sort of doing these sort of core products versus more exploratory research.
Talking of bumps and warts and all, look, the commercialization hasn't gone that smoothly. And that is kind of the problem of being such a big company where they can't act like a startup all the time.
Yeah, I think so. Although, you'd think that clearly Google is under much more scrutiny around for the kind of mess ups that they have, right? The Gemini ones, which we've talked about. And I think that's totally understandable given just how big of their services are, right? Like how many people are using Google Search on a daily basis, and how much responsibility that has, not just for their bottom line, but obviously like the regulatory scrutiny they're under. And internally, I think that those screw ups that they've had recently, I think there's going to be some interesting tension about what changes they make when they launch. They clearly have been scrutinized and criticized for a long time, particularly from internally for moving too slowly. And I think OpenAI and Microsoft has really pushed Google to move pretty fast. And you could say that some of these pretty public snafus they've had with Gemini might be a consequence of that.
Demis, of course, seeing AlphaFold and medical applications, a real business model, but we see how Gemini continues to evolve as well. It's a great story. Go read it. Mark Bergen, a deep dive on goings-on at the top when it comes to AI labs becoming one over at Google. Meanwhile, coming up, we're going to talk about goings-on in terms of M&A and rationalization elsewhere in AI. Clem Delangue's with us. He's the CEO of Hugging Face, talking about the M&A landscape in artificial intelligence as he does a deal. And he teased it a little bit ago at the Tech Summit with us. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets for you. And we're currently up 0.4% on the bigger benchmark, the Nasdaq 100, managing to shake off some of the anxiety over in European trading. In fact, the CAC 40 rallies 0.9%. We see Marine Le Pen, of course, the right-wing contender, trying to take the prime ministerial role, saying, look, she will abide and respect institutions and indeed work with President Macron. So we get a little bit of a bounce back, but still the political anxiety is there. Bitcoin off by almost 2%. Look, we're only at 65,000 now, so we've seen some profit taking in crypto more broadly. Move on, have a look at what some of the individual movers and shakers are, because we are seeing some individual corporate moves, up 5% for Autodesk. Why? Activist investor Starboard Value has built up a stake in Autodesk, the software company, more than $500 million. They want to push for changes. Investors like that. Dell Technologies, well, the CEO is selling out some more than $300 million worth of the stock, but that does not matter in terms of the selling pressure. We're currently up more than 6.6%. That seems to be more on analysts saying, look, this is still a stock that you should be buying. I think it was JP Morgan that had been speaking with executives, or indeed it was Morgan Stanley reiterating their top pick after some management meetings. Meta off by some 0.7%. They, along with a number of social media companies, really being forced to think about how much they look at AI chatbots, but more broadly, how much they also look at focusing on the Surgeon General calls for some warnings of addiction. Let's move on to look at what's happening with Adobe, because we just had some breaking news. We're off by more than 3%, having been trading higher in, down earlier in hours, but still off by 3.3. The FTC is taking action against software maker, and two of its executives, that's Maninder Sawani and David Wadhwani, apparently for deceiving consumers by hiding the early termination fees for its most popular subscription plan and making it basically difficult to cancel your subscription. The FTC just releasing that action. We remain under pressure on Adobe after some stellar results last week that pushed the stock up more than 10%. But let's turn to another corporate story right now, because look, we've all been thinking about how AI is affecting Microsoft, that seemed to be well ahead of Apple, but now not so much the case. Ever since the iPhone maker unveiled its own AI and ChatGPT integrations at the beginning of last week for the iPhone, for the Mac, suddenly it feels like Microsoft's lead isn't so large anymore. We want to break it down with Bloomberg's Austin Carr, who's written for the Tech Daily newsletter today, all about your own personal feelings of whether Microsoft has kind of slipped here. What's your takeaway from Apple? Why do you think they've got it right?
So I'm an iPhone user, and I'm also a Windows PC user. I've been sort of using the AI that's come with Windows for a little over a year now. Microsoft had this big lead. But then Apple launched or announced all these AI features last week, from easier ways to search for your photos to making sort of custom emojis with AI in your social interactions, interacting with Siri. And suddenly I got that same excitement I had with Microsoft about a year ago, but which I haven't really had since then. These are all new products that are coming to the iPhone. They're going to integrate very well with my day-to-day use for the iPhone, iPad, MacBook, and so forth. And it's really interesting that, Apple was so far behind seemingly just, a week or two ago. And suddenly a lot of consumers are really excited about these products they're launching, despite their super comparative simplicity with what Microsoft is launching by comparison.
Investors are pretty excited too, Austin. We're at new record highs. We're eclipsing and back to the most valuable company on the indices. What is it more broadly that they're managing to integrate? Is it just that they're a more consumer-focused company than Microsoft is?
I think one of the upsides that they have is a lot of these devices and services are already in people's hands. So they're sort of sprinkling AI on top of iMessage in case I want to send a custom meme. We don't have to download a new AI app. You already have Siri, so it just makes it a lot smarter. By comparison, Microsoft has to do a lot of the legwork. We don't have a Windows phone. Yes, you have Windows PCs or Microsoft Word and Excel, but it doesn't dominate your day-to-day life, at least from a consumer standpoint, in the same way that Apple does. So that's really the upside that a company like Apple has. You were just talking earlier about Google. They run into a lot of these issues all the time because people expect their Gemini product to be as good as Google Search, and it's just not easy. Whereas Apple is coming in and saying, we're just going to do a lot of simple things and do them very, very well and add them to the products that you're already used to. So they're not reinventing ChatGPT. They're not trying to become a ChatGPT competitor. In fact, they're integrating with ChatGPT, and anything that they can't do, they'll just boot you over to ChatGPT, an integration that I'm sure Microsoft's a little bit jealous of, considering they've invested about $13 billion into OpenAI.
True. Austin Carr, that's a great read. Thanks so much for coming on and giving us the feels around Apple. Meanwhile, let's stick with AI, because it would seem like we've entered kind of the AI startup M&A season. There's a growing number of artificial intelligence startup founders. Basically, they're looking to sell their companies. Why? Because it's so expensive with the compute power. The CEO of Hugging Face is with us, which had just acquired a small company called Argilla of $10 million, fourth acquisition to date. And he kind of told us that this might be occurring in the market. Clem Delangue joins us for more, CEO of Hugging Face. And what was it? But a month or so ago, they were sat in San Francisco, and you're like, this is happening. This M&A is real, and I'm getting a lot of calls offering to sell their startup to me. But you went out and found this one yourself.
Yes, and I think it's just the beginning. I think we're going to start to see many more acquisitions in the next few months. This acquisition is a good example. Argilla is a fantastic team based out of Spain, working on a tremendously important topic, data sets and data for AI. Their name, Arguila, means clay in Spanish. That's a good image for what data sets and data are in AI. They're kind of like the foundation, the soil that allows machine learning and AI to grow. So we're super excited about this, and I feel like this is just the beginning for M&A for Hugging Face, but for the field of AI in general too.
Okay, so when you look at a $10 million deal that I think the team's going to remain intact and they're almost going to continue to operate as they have been, how else would you want M&A to happen for Hugging Face? Will you do such sort of standalone deals? Will they get bigger?
Maybe. I think it all depends on the talents, on the opportunities. As I was sharing with one of your other reporters, the volume of acquisition opportunities has really skyrocketed in the past few months. Just Hugging Face alone, I realized that we're receiving over 10 acquisition opportunities a week these days.
Wow.
So it's companies
phone calls
expressing
or
interest.
emails? How are you getting it?
Emails, yeah, emails, mostly, or like connecting with me on social media. Definitely increased, so it's really interesting to see. I think there's this natural tendency of like concentration in AI, and some companies like Hugging Face or others becoming some sort of magnet, right? Because of the visibility that we have, the talent that we have, the compute that we have. And for all these startups that have good teams, that have maybe early traction, but might not attract the level of VC funding that is required for AI, there's going to be a lot of opportunities for them to join other teams, which is an interesting trend.
Because you've raised hundreds of millions, and there's Google, Amazon, Nvidia, all the who's who of corporate VCs invested in your previous round. So you've got the cash to be able to make these acquisitions. You've got the compute power. Is there any theme of where these companies that are currently wanting to sell themselves are coming from? Is it geographical, or is it within the stack layer? Like, what are the problems they're trying to solve?
So I think a lot of it is parallel to the concentration of VC bets in a way. I think right now VCs are taking heavy bets on a couple of like very hot topics, like for example, large language models, right? You've seen maybe the fundraising of Mistral out of France a couple of days ago. And so when the startups are working on topics that are a little bit less hype for VC, like for example here it's data sets. It's kind of like a different picture. It's a different life. It's like I won't quote quoting Rocky Balboa. The world ain't all like sunshine and rainbows for AI startups that are working on like less sexy AI topics.
Yeah.
And so we see a lot of opportunities in there. And it's super exciting because, for example, here for Arguila, working on data sets, on data, which in my opinion now is becoming kind of like the bottleneck or like the most important topic for AI.
Right.
Because better data allows companies to take a Llama 3 base, for example, and then fine tune it and get better results for their use case than GPT-4. So
Clem,
all these other topics that are not that hype are super interesting.
I have to leave it there, Clem Delangue. Making the unsexy sexy for your business. We appreciate it, CEO of Hugging Face. Coming up, look, we're going to be talking about perhaps a little bit of M&A, where the value lies. VC Spotlight, FPV Ventures Managing Partner Wesley Chan joins us. Let's have a quick look at what's happening in the public markets too, though, because the FTC is taking action against Adobe and executives for hiding fees, so says the Federal Trade Commission, preventing consumers from easily cancelling software subscriptions. We're down by more than 3%. They were down prior to this announcement. This is Bloomberg Technology. Time now for Talking Tech. First up, the US Surgeon General is calling for warning labels on social media sites, similar to those that you'll find on a cigarette carton. Top health officials are calling on sites such as TikTok, Instagram, to include a warning to parents then it could harm the mental health of children. Legislation on the labels have yet to be introduced. Plus, Indian fintech firm Paytm is in talks to sell its movie and ticketing business to Zomato as it looks to unload non-core assets. And the discussions between Paytm and online food delivery firm Zomato are in advanced stages, though other suitors have voiced interest. And the US Supreme Court has agreed to review a case over NVIDIA's crypto mining revenue. NVIDIA is seeking to stop an investor suit accusing the company of being deceptive about its crypto mining revenue before a 2018 market downturn. But the justices say they will hear NVIDIA's contentions that the complaint lacks enough specificity to go forward. Now, time for VC Spotlight. Joining us today is Wesley Chan, FPV Ventures co-founder and managing partner. And it's interesting that we talk about NVIDIA just before our segment. And you're kind of the anti-AI voice in the room at the moment. Why? What are you feeling around the hype?
I think there's too many people, right? I love contrarian investing. When I invested in Canva on the Series A, there was 111 investors that told them no, right? They said, you're too far away, you're in Australia, we don't get how this is gonna work with Adobe and Microsoft having these amazing tools in the market. People trained on them, and all of a sudden, Canva is now being used by everybody under 35 with over $2 billion in revenue. So I always look at it as, what's the contrarian bet that we can be making? And if everybody's rushing into the fire, or rushing away from the fire, what fire should we be running into? It's kind of like going to Europe in the middle of the summer when everybody's off in school. You get crowds, you overpay, every hotel room is €1,000 a night. You want to be going in the middle of winter when it's empty and you can get the entire museum to yourself. So that's what we look for. We're not so much anti-AI as we are contrarian, and we want to go bet and place the investment when the timing is right.
Okay, so where is the timing right for right now? Where is the original check into Canva laying right now?
Well, some of the interesting bets are in areas where nobody thinks AI can make a difference, right? So one area that we're spending a lot of time in is in drug development and drug discovery.
Sorry, I hear a lot of people thinking AI is going to change drug discovery.
Well, they're not making the bets yet, right? Like if you look at companies in biotech right now, it's still kind of half dead, right? Like there are investors investing in the LLMs, or investing in the data management. Some of them are investing into drug discovery, but not much, right? We just did a big investment in a company called Beta. They announced a $55 million round, and they use AI to train on mass spectrometry data. It's the same AI that they're training, that you're finding on ChatGPT, but they're training it on models, and they're training it on data from mass spectrometries, like the machines that you see on CSI, and they're trying to use that to discover new molecules that can cure cancer, that can cure major diseases in natural compounds, and they've already found quite a few, and hence Microsoft just made a big investment into them. Again, it was not obvious when we made the investment. It was contrarian. Everybody sat there and said, well, ChatGPT is great for all this tech stuff and for writing essays and for helping high school students sort of create and do research. And all of a sudden, we have a company that's figured out how to discover new molecules using some of the same AI tools. That's non-obvious. A lot of people thought that was crazy when we made the bet.
You're making very early bets, and I'm interested as to how long you ride with the bet, how much you can pay to play throughout the series that we get, because we're getting these corporate VCs wanting to come in on later rounds, and are they wanting a cleaner capital base? Are they wanting to push people and earlier investors out?
And I'm fine with corporate VCs coming. It makes me look good if they're coming into the round after we made the investment. The important thing is we have to find the right timing and find the right moment when the founders have discovered a unique insight using the AI or using tools as that AI provides to help them figure out how to make something majorly different, right? Whether it's drug discovery or it's helping people figure out how to better balance their checkbooks or whatnot. Like that moment in time when the founder sort of says this will change because of AI, or this will change and I'm using AI to help make that change, that's where we get excited.
And you can continue throughout all the series.
I mean, we're a venture fund, right? One of the most amazing thing about venture funds is we have a 10-year lifetime on the fund, right? We'd like companies to exit earlier, but our LPs are all long-term investors, right? They're all endowments, they're all charitable institutions, they're university endowments, right? They know that there's a 10-year time horizon, and that's one of the greatest things that we have going for us in this business. I'm not making the bet for tomorrow so that some big corporate VC comes in and marks up the deal. We're placing the bet for 10 years down the road. People forget that Google took, almost a decade to really realize its major potential, right? It IPO'd 6 years after its founding in 2004, but it really was 10 years when YouTube and when Android and when some of the bets that they placed early on in the early days of Google became to fruition. And same with Canva, right? 10 years, it's been 10 years, and now everybody's sort of seeing how obvious it is, but back for the first 5 years, everybody sort of sat there and scratched their head and said, I didn't get it.
What about getting out? What about sort of a company that does initially seem to do incredible work, Flexport, for example, and then has some tensions at the top and reorganization. Do you stick with them throughout that iteration?
Absolutely. I mean, I still hold every share of Flexport stock that I've invested in, right? I believe in Ryan and his team that much. It's the same with Google. When Google IPO'd, a lot of people sort of said, let's dump the stock. Like, I don't get it. Like, you know, this company's hit its peak. And at $85 a share, I think it's at $16,000 or $17,000 now a share, right? That IPO investment at Google is one of the best venture investments of all time, right? Too bad we don't do public equities. But it's one of those things where I look at it and go, does this company have 10 years of inflection points, and does it have more coming? And the founders that we invest in, the mission-driven founders that truly understand how the world will change when they create what they're creating, those are the ones that we care about. And they usually, you know, create 100-year plans. I still remember Mel's 100-year plan in Canberra, right? Like, she graphed it out on a pirate ship map.
And I'm sure you perhaps had some insight to Google's 100-year plan as well as you were over at Google Analytics and Google Voice. Wesley, it's always great to get your contrarian views.
Thank you. Thank you for having me.
Meanwhile, of course, that's SPV Ventures, Wesley Chang. Coming up, we're going to talk about the Sun box office. Actually finally getting its biggest debut since Barbie. Pixar's Inside Out 2 draws crowds back into the theaters. Details ahead. Meanwhile, let's just check out what's happening with AMC. Now, meme stock, of course, up 1.2%, but we're seeing Inside Out 2 probably helping AMC Entertainment, but they're also perhaps talking more about the records, the theaters, US attendance of 3.8 million over the weekend from Thursday to Sunday, so says AMC. We'll keep an eye on what's also its long-term path. This is Bloomberg Technology. Oh, it was a big weekend at the box office. Pixar's Inside Out 2 seeing the best film debut since Barbie. It's grossed $155 million at the box office in the US and Canada. Meanwhile, social media has been abuzz with the streaming debut of season 2 of House of Dragon, which premiered last night. There's a lot in terms of content, not to mention the latest film that actually will be allowed in China from Walt Disney. Let's talk it all with Geetha Ranganathan of Bloomberg Intelligence. Focus in on Disney for a moment and the content and the fact that we've got people going back to the theaters. Do they just need the right movie at the right time with the right kind of audience?
I absolutely think so. And Disney is back in a big way, definitely. Pixar is back in a big way, Caroline, and so is the box office. I mean, the box office has been really sleepy the whole of this year, and especially this summer season. And for Disney in particular, I mean, we know they've had a whole string of misfires, especially Pixar. We know that they released 3 movies direct to streaming during the pandemic era. And then after that, you know, they had Lightyear, they had Elemental, which kind of really struggled at the box office. But it looks like Inside Out 2 is really resonating with everybody. And I think, you know, of course, it is a movie that appeals to kids, but I think also to parents like you and me. And it's just such an emotionally charged film. And box office is all about emotion. So they obviously got the formula right.
Every single parent of teen girls I'm talking to wants they be able to discuss anxiety and how we combat this, and so this is one way. I'm interested, though, about the global box office. Interestingly, we got on social media Walt Disney saying, look, we are going to bring Deadpool and Wolverine to China. That's a big deal.
It's a huge deal. I mean, what we've seen over the past few years with China is that Western movies have kind of fallen out of favor a little bit. So if you just look at kind of how the Chinese box office has performed, actually, China is one of the leading markets right now. If you look at year-to-date box office receipts, they're actually ahead of the US. So China is definitely critical to the global box office equation. And if you kind of just look at how Hollywood movies have performed in China, about 10 years ago, they made up almost 50% of the Chinese box office. That kind of has been shrinking. So that was down to about 35% in 2019. And this year, it's probably down to about 10%. So having a big movie like this, and especially one of the most anticipated movies of the summer, Deadpool and Wolverine, go out in China, it is big news for Disney. And hopefully it will be big for the Chinese box office, too.
What's interesting, though, is you say the tension around whether any of us can be bothered to go to the theatre right now when we can consume such great content when we're sat in the comfort of our own sofa. And to a large extent, House of Dragon is exactly that. We are still wanting to see new content, but quite often from franchises we know.
Oh, absolutely. And, you know, that's exactly what some of these streaming platforms are betting on, kind of making these investments in what they know, you know, will be appointment television. And HBO and Max have obviously been the leaders, the global leaders when it comes to that. And of course, House of Dragon, the Game of Thrones, all of these are, you know, huge, huge titles for them. And they want to make that an event and an experience. But you're absolutely right. This past weekend has been such a big win, not just for, box office and movie going in general, and people are going and watching movies more in big screens. That is huge news. So they're making it like a whole big event, but then they're also coming back home and then, kind of relaxing on their couches and watching some great streaming content as well.
Some are lined up. Geetha Ranganathan, we thank you of Bloomberg Intelligence. Some great analysis. But that does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.